What's going on, guys? In this video, I want to give you guys 3 moving averages that can potentially limit you from taking losing trades and save you a tremendous amount and make you a tremendous amount of money if you're trading the Nasdaq futures, you're trading ES, you're trading stocks, options, Forex, crypto, doesn't really matter. Those 3 moving averages are going to be the 200-day moving average, which is the yellow line that you see on my chart. The next one is going to be the 50-day moving average. All of these are simple moving averages. The next one is going to be your 20-period moving average, which is a 20 simple moving average. Now, the reason being, these are the 3 most important, I feel, moving averages that you can put on your chart, is because when you talk about long-term investing, these are the moving averages that most investors are looking at. The 200 being, are you bullish or bearish? If you're trading above the 200-day moving average, technically you are still in bullish context and you want to get as low as a price as possible. The 50-day moving average is your swing trading and your short-term intermediate, Q1, Q2, Q3, Q4, work them in batches of quarters. That moving average, if you're trading below the 50-day moving average, you're going to be a little bit more sell biased. And when you're reclaiming the 50-day moving average, you're going to be more buy biased. And your 20-period moving average, if you're an investor, is giving you your short-term trend, typically for the month. Okay, so with that being said, when you factor in all of those moving averages into day trading and into scalping, you're going to see something very, very special. So notice today we kind of sold off, today being March the 6th. We sold off a little bit. There was a lot of just choppiness action. If you guys can just take anything from me in the 13 years of experience that I have, guys, sit out of the market for the first 15-30 minutes. Because of the fact that it's so volatile, it's extremely hard to manage your stop losses right now. You could be right on your idea, you could be right on the setup and still lose because of the range is so thick, you're going to get tagged out. Look at what happens here once we reclaim this 20-day moving average. We stop and we close right at the 50. Guys, it's matches up to a T. What would you be looking for in this type of situation? Okay, we've put in a low here, we've consolidated and put in a floor. We've reclaimed the 20-day moving average, which is giving me my short-term trend. And we're also breaking that intermediate trend, right? Which is a 50-day moving average, which is nice and flat. If I confirm, over the 50-day moving average, I want to be on the right side of the move. I'll give you a perfect example. On your daily chart, right this second, pause this video and look at the daily chart and look at what happened to the Nasdaq 100 once we closed below the 50-day moving average. Look what happened after that. And I'm going to give you some time and you're going to come back to this video and this is going to make more sense. So if you reclaim the 50-day moving average, don't you think you're going to have a little bit of a run, right? And if the 200 is telling you your macro trend, your big trend, right? Think about it as an investor. If you're an investor and you're trading below the 200-day moving average, you don't really want to be long, right? You want to be buying or selling at that particular area. So in this particular case, since we're scalping and we're day trading, we're not really concerned about what we're going to do 5 hours from now. We're kind of concerned what we're going to do in the next 20, 30, 40 minutes. So if we get over our intermediate trend, well, then this is a good spot to take profits. And look at what happens once we tag the 200-day moving average. It acted as very, very strong support. Remember, your 200 is the strongest, your 50 is the next strongest, and then your 20 is the start of that trend. Once we tagged the 200-day moving average, we kind of pulled back. We held our rising support on our short term. We put in a lower high, and this was a perfect area to look for a short position, was off of this lower high. Now, again, because the range is so significant, it's extremely difficult to manage your stop loss. So you're going to have to play micros, or you're going to have to really be quick to adjusting that stop loss. Okay. You want to be very quick to adjusting that stop loss, just due to the fact that getting it to break even is going to be your best friend, because if it does whip back, it's going to whip back 20 or 30 points. Look what happens when we lose not only the 20, and we lose the 50-day moving average. We start that sell cycle again. And because we're already trading below that 200-day moving average, you know that the price action is macro bearish. So if we're macro bearish and now we've lost our short-term and our intermediate trends, what do you think's going to happen? The hardest part about this whole game here is, yes, in hindsight, it looks perfect. The hardest part about this game is, how the hell do we manage a stop loss, right? again, if I'm looking to go short somewhere here, once we lose this 50-day moving average, well, this, by golly, is a 100-point candle. There's no shot in hell that I'm going to give myself a 100-point risk. So maybe if I get in short, I have to use any closure back over that 50-day moving average as my stop loss. So if I'm going to get in here and this candle starts to bounce and we close over the 50-day moving average, I got to cut it. I got to cut it very, very fast, because I don't want to risk this doing something like this, stopping me out way up here for 100 points. We're not going to do that, right? If we can get this down 15, 20, 30 points max and then just try to hold it, and as soon as you get at least 2 pushes down, right? At least 2 pushes, you know, I would prefer 3, but you know, if you get 1 push down, 2 push down, then maybe you can move your stop loss to break even, and now it becomes a break even trade, and you can just hold that puppy and try to make some more cash. So again, the 50, the 200, and the 20, use those for scalping. You're going to do much better off. Come back to this video. If you guys need Apex accounts that you guys want to try out using these moving averages, code DANTHONY, D-E-E Anthony, you save 80% off. If you guys want to join Evolution Traders, that link is down in the description box below. I will catch all of you guys in the next video.